Now that Brexit is done and dusted, there is a new point of contention between the EU and the UK. What is it? What are the latest developments in the United States regarding Donald Trump's judgment by the Senate? And how did the group of retail traders manage to destabilize the global financial services? This and more in this week's In Retrospect. The EU demanded that Astra Zeneca diverts vaccines produced in the UK to the continent in order to meet the conditions established by a contract signed by the two parts a few months ago. This happened after the giant pharmaceutical firm confirmed that due to problems at one of its plants in Belgium, it would be unable to meet the very ambitious delivery targets set on that contract. Many in the UK are unimpressed by the stance of Brussels on this, with the EU threatening to block the export to Britain of Pfizer vaccines produced in the continent. This, of course, it's bad news. Just when we thought that Brexit was behind us and we could look ahead to a less tense era, tension seems to be once again growing between the two sides. In Washington, lawmakers will soon start deliberating over whether or not Donald Trump is guilty of inciting the crowd that stormed the Capitol on January the 6th. If found guilty, Trump will be unable to hold any political office in the future. However, it is clear that this decision will be dictated by politics more than by anything else. Fearful of the power still exerted by Donald Trump over the more than 70 million voters that backed him up at the last presidential election, the vast majority of Republican lawmakers is unlikely to vote against the former president, making a conviction very unlikely. The other big story of the week comes from a large number of retail day traders that got together online through Reddit and, using leverage vehicles such as options, placed a very large number of buying bets on a struggling games retailer called GameStop. This caused a loss of several $billions to Melvin Capital, as the hedge fund was forced to close its short-selling positions. This new dynamic, with retail traders defying market logic and pushing up the price of dwindling stocks, caused alarm in Wall Street and around the world. It certainly wasn't what industry leaders had in mind when they met in Davos and discussed the need to democratize financial services. And how are the markets reacting to all of this? Well, the main stock indices suffered the heaviest daily losses of the last 3 months, as investors, spooked by the retail flash mob, closed positions in sound stocks in order to cover their losses. However, this didn't last for very long, as many saw the opportunity to buy the dip. Nevertheless, there was some real apprehension regarding the volatility triggered by the retail traders, which had a negative impact on risk appetite. As a result, the markets appear to be balancing between, on one side, the hopes of a strong recovery later in the year, and on the other, fears of a big sell-off. This is all for today. I will be back next week with more views on current affairs and the financial markets. In the meantime, you can go to activetrades.com or activetrades.eu, depending on where you are, for more market analysis. If you enjoyed the video, please subscribe to our channel and don't forget to click the like button. Thank you very much for watching.